This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
TradeFlow Capital Management celebrates 5 years of strong returns and SME success. To find out more, please visit www.tradeflow.capital.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Australia's lower house on Monday passed an emissions reduction plan with curbs on some new gas and coal investments and a cap on total greenhouse gas emissions from the country's biggest polluters after a key deal with the Greens Party. The Safeguard Mechanism reform legislation is key to the Labour government's pledge to cut emissions by 43% by 2030 in a country that ranks as one of the world's biggest carbon emitters per capita. Weeks of talks with the Greens Party, whose support is needed in the upper house Senate, yielded changes including a hard total emissions cap, ministerial review for projects that raise total emissions and compulsory disclosures for polluters that rely heavily on carbon offsets to meet their targets.
Oil prices stabilized in Asian trade on Monday as investors sought cues from broader financial markets, while comments by Russian President Vladimir Putin over the weekend ratcheted up geopolitical tensions in Europe. Brent crude futures held unchanged at $74.99 a barrel at 0357 GMT after hitting a session high of $75.64. Brent rose 2.8% last week, while WTI rebounded 3.8% as jitters in the banking sector eased.
Moving on to the top news in the energy sector.
The Kurdistan Pipeline Company has shut the Iraq-Turkey pipeline at the request of the Turkish government, oil companies in the region said on Monday. The news comes after Iraq on Saturday halted crude exports from its northern region after the country won an arbitration case in which it said that Turkey violated a joint agreement by allowing the Kurdistan Regional Government, KRG, to export oil to Ceyhan. Iraqi Kurdistan-focused oil firm Genel Energy plc said it expects the shutdown to be temporary and that it continues to produce oil into storage facilities.
U.S. gas prices have slumped close to their lowest level on record, after adjusting for inflation, as traders respond to signs of a persistent production surplus in the domestic market. The front-month futures for gas delivered at Henry Hub in Louisiana have fallen to just $2 per million British thermal units, down from more than $9 at the end of August 2022. In real terms, prices are the lowest on record, except for the period between February and June 2020, when the first wave of the pandemic hit a market already carrying very high inventories. Next, we have the top news in metal markets. Gold prices fell for a second straight session on Monday as the U.S. dollar firmed, while investors weighed measures taken by authorities to assuage fears of a crisis in the global banking sector. Spot gold was down 0.5% at $1,967.86 per ounce, as of 0632 GMT. U.S. gold futures slipped 0.8% to $1,968.90. The dollar index rose 0.2% and made bullion less affordable for overseas buyers. First Citizens Bancshares Inc. will acquire all of Silicon Valley Bank's deposits and loans from the Federal Deposit Insurance Corporation. The news cast an uneasy calm over fragile markets on Monday.
Copper prices climbed on Monday, supported by lowered global supplies, while the nickel contract on the London Metal Exchange, LME, slipped on its first day trading during Asian hours since last March. 3-month copper on the LME added 0.4% to $8,960 a ton by 0442 GMT, and the most traded May copper contract on the Shanghai Futures Exchange was up 0.2% to 69,250 yuan a ton. Copper inventories in warehouses monitored by SHFE were down 11.6% last Friday, falling for a fourth consecutive week. Stocks have declined 36.2% so far to 161,152 tons, from a peak in late February.
We will now look at the top news in the agricultural sector.
Malaysian palm oil futures climbed on Monday, lifted by stronger March exports so far, setting the contract on course to snap a 7-day decline. The benchmark palm oil contract for June delivery on the Bursa Malaysia Derivatives Exchange rose 35 ringgit, or 1%, to 3,547 ringgit, $801.40, a ton by midday break. Palm oil attempted to recover some of the massive losses from last week, but there was little momentum to sustain the prices higher, said Sathya Varka, co-founder of Singapore-based Palm Oil Analytics. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.